Right, okay, hopefully you have saved down this template, right? You have drawn your annotations on here from the previous basic market structure walkthrough, and you have your 4 hour swing points on at a minimum drawn on. Potentially you will still have your minor breaker structure, right? And your change of characters there as well, but ideally you have your 4 hour swing structure mapped out. Now, what I want you to do just solely for the premium and discount lesson is I want you to go up to the right hand corner to your current save template, and I just want you to make a copy. So what this essentially will do is just duplicate all of the drawings that you have done, and then call it whatever you want. In this case, I'm just going to call it premium versus discount, just because we need to have a separate chart saved down. So it may take a little while to do that just for the purpose of premium versus discount whilst we do this, because we're going to be drawing obviously the tools across the charts and it can get a little bit messy. So as we go throughout the rest of the course and we start to build on more concepts, what I want us to do is to use our initial, right, the one that we were first using, this initial layout, to build on those concepts. But just now, whilst we really dig into premium and discount, the chart's going to be a little bit messy, so I just want to keep it to a separate one here. So then when we go back to our original one, we can build on this and it won't get kind of overwhelming and confusing, if that makes sense. So yeah, this will kind of be our sort of practice arena for playing around with premium and discount here. So what I'm going to do is just go through the price action that we've done so far. This should be a lot quicker than having to actually go through each bit of price action and map out your structure, because now we already have our swing points. So literally all we are going to be doing is drawing our premium discount right between those swing points. So if you have that premium and discount tool saved, I did briefly go over it in the theory video, but essentially what you want to have, if you haven't already, is have this fib retracement tool, which you can get over here and save it down to your favorites toolbar, and then you should be able to have something looking like this, right? So what we do when we are bearish, right, because we're looking at these lower lows and lower highs, is you can draw it from the high to the low, and then you can see where we have the premium and discount. Now there's a few ways you can kind of do this in the live market. Now ignore the colors here, it doesn't really matter which way you have them round, right? It's just kind of whatever makes sense to you, right? But yeah, the way I was saying in terms of which way you would draw it is in the live market, right? Imagine we don't have all of this price action yet, but you would just, price was down here and you're anticipating potentially where price is going to pull back, is you can just have it on the swing leg, right? Rather than having it drawn the whole way across, because, as you start to have more concepts and more analysis tools drawn on your charts and you're flicking through multiple time frames, it can get very, very confusing when you have all of these colors and shades everywhere. So I wouldn't really advise that you kind of do that in the live market. So I would do something like that. Or what can be even better is you can just hold shift when you drag it across so it doesn't move. If you hold shift, right, and then just have it drawn off to the side here. So this whole time you can focus on price action and you can see where we are within the leg, right, whether we're in the premium or the discount. And that way it will become a lot easier. But for now, I keep it even more minimalized than that. So I just have it there saved as a range. And essentially that way, I don't really care about what colors. Sometimes you can get, end up drawing it the wrong way around. But essentially all I care about is where is the EQ. I know that that's the 50%, right, from the swing high to the swing low. So anywhere above the EQ is always going to be the premium, right? No matter whether it's bearish or bullish. The top part is always expensive, right? The higher the price, that's the premium. The lower the price, that's the discount, right? So that way you don't end up getting your colors mixed up if you kind of had those shades there. So yeah, really simple tool, right? We're in this bearish trend. We get that 4 hour break of structure. What do we expect after a 4 hour break of structure? We expect a pullback. How do we know when that pullback is going to kick in? When we're purely just looking at market structure, well, we expect that to be that change of character, right? To give us that minor break of structure to the upside, which is what we get here, which then shows us that the swing run may be over and that pullback is kicking in. And then how do we know when that pullback is going to be over? We look for then another minor break of structure to the downside where we get that change of character here, and we then switch bearish, right? And then that gives us that sign that we get that next leg down. So that's what the way we were anticipating those swing moves, purely just looking at basic market structure on one time frame alone. Now we have introduced one more concept, which is of course premium versus discount, just to help us increase the probability of when that pullback may be over. So when we see that the pullback starting to kick in and we get that change of character, then we can kind of start to mark with a bit more confidence where that swing low likely is, right? And then that's when we can draw on our premium versus discount tool. right? And now what we can see, price pretty much comes back up to the EQ, right? Of course, it doesn't quite tap it and misses it here by a few pips. But if you see price coming up here, it's pretty much mitigated the EQ of the leg, right? We've pretty much come back to fair value for buyers and sellers. We then get our change of character back to the downside, right? Now you have that extra piece of confidence, that extra piece of evidence, and that you are now building to build, you know, a more high probability trade idea, right? And then what we can do is position ourselves short. We're now pro the 4-hour trend, and we can look to target that week low at a minimum, right? Because that low never took out the swing high, so we expect this low to be taken, and we get our break of structure. So that's literally as simple as it needs to be. Yeah, one last point I kind of make about this bit of price action is, you know, the market is imperfect, right? We're not always going to get those picture perfect pullbacks to the EQ or all the way into the premium. You kind of just have to just, you know, use it as a spectrum of probabilities, and obviously the higher up it goes, the better it is for us to be getting into shorts. But you're gonna, you know, the whole point of this exercise is to see, sometimes it will pull back to the EQ, sometimes it will pull heavily into the premium when you're looking for shorts, sometimes it'll only pull back a little bit and it will go. So the whole point of this is to collect data, see how often it does pull back, see when it doesn't pull back. I'm just going to make this a little bit more dim because it's already annoying me. See how often it will pull back, and then we can start to collect data and get a bit more experience. Because if you're always waiting for price to come up into the premium, sometimes you're going to miss moves, and that's okay, right? It's just going to be dependent on each individual trader, how aggressive or how conservative you want to be. But this will just really give you a good understanding of how likely it is, and not overall price is going to pull back. But anyway, we get that next bearish leg, right? Now we start to get that pullback down here, so we can mark out the new range that we are within. And as we can see, after that 4-hour break of structure, we get that minor break of structure to the upside, that change of characters to show the pullback's kicking in, and we pull back up into the premium, right? Then we start to get changes of character again, back to the downside down here, right? Showing us that potentially that is the lower high in place. We've mitigated the premium, right, the EQ, and now we're ready to go and run this week low, okay? So let's speed this up a little bit and draw on our next range. So that swing high is all the way up here, all the way down to this low here for me. Obviously we get a very, very shallow pullback there. Some of you may not classify that as a swing pullback, that's okay. But again, just remember to be consistent. Then we are within this swing range here. Now, of course, at this point, we do pull back up into the premium, so you can see sellers start to step in already. But this case, right, buyers keep stepping back in. We've had a minor break of structure there. We've had another minor break of structure. We are now in the premium. Remember, we spoke about this. And then, we still at this point, purely just looking at market structure and one single time frame, right, forgetting everything else. We just assume that this lower high will hold until it doesn't. So then when prices and premium prices of this 4-hour swing range, right, then we get that bearish change of character back in line with the overall swing trend. What do we expect? We expect that potentially we can target this low, right? But of course, we're playing with probabilities. We end up getting another change of character to the upside, and then we run that high and we get a higher high. So then we are in the bullish trend, right? And then we wait for our swing pullback. So in this case, we can then mark out from the swing low to the swing high. And now because we are bullish, ideally we want to be buying back down here, right, in the cheap prices in the discount. But like I said, playing with probabilities, it's not always going to work out. The price is going to come back that deep. Now, one thing you will notice, and again, this is something you'll have to get experience with and test, is that you want to be asking yourselves, what commonalities am I seeing when price is not pulling back anywhere to the discount if it's bullish, or the premium if it's bearish, and try and spot those things so you can anticipate when to expect that price isn't going to pull back that deep. Now, one of kind of the things you may notice is at the start of new trends, right? In this case, where we have a nice big impulsive move, right? The momentum is very high. Obviously, buyers are stepping in because they really like this area. How often does price then pull back to the discount or to the premium if we were bearish, right? And that may be something that you want to take note of and record. That at the start of those new trends, how often is it likely that price is going to pull back when we're kind of getting a lot of high momentum at the start of the new trend? Okay, so then we are stuck within this new range here, and this time we can see, right, we did come back into the discount of the leg, right? And then that comes down to cheap prices for buyers, and that gives us the fuel to then go up to the next move. Now in this case, you can see we didn't come back to the EQ, right? Now one other kind of thing I'll say is, again, getting a little bit ahead of myself here, but as we go through the course, and of course as we go through the course, we are going to learn more concepts and more tools that are going to help you as well to identify and you'll see what is forming on price action, then suddenly you'll see actually, it's not looking likely now price will come back to the premium, back to the discount if you're getting long, because like I was saying, right, it's going to depend on each individual trader, kind of how conservative or aggressive you will be. And some of you may only want to trade pro trend, for example, and some of you may only want to look to buy when price comes down into the discount, right? And there's absolutely nothing wrong with that. In fact, I would advise that for a lot of you, even when you're starting out, because that is going to give you your highest possibility of having that higher strike rate. Okay, but as you go on, you will learn concepts such as liquidity concepts and supply and demand, right? That is going to increase your increase the probability of buying in the premium, right? So in this case, right, we are playing in this swing range, right? We mark out the EQ. Ideally, we want price to come back down to here. But if you see certain things and ticks and boxes are ticked in your trade plan that occur when we look at liquidity sweeps, when we look at where there is supply and demand, and you see that happen, then you can go, okay, it's not ideal that I'll be buying here, like looking to buy here in the premium, and I could be a bit early and we could come down lower, but actually I've seen X, Y, and Z of these other concepts we're about to learn, and that's okay. So now that has stacked probability enough in my favor to be happy buying in the premium, okay? So that's why, you have to take everything as a whole, and we're always looking to build that portfolio of evidence to start to to start to tip those probability scales in our favor as much as possible, okay? So the reason why I'm kind of getting a little bit ahead of myself here and talking about other concepts that we haven't looked at or really want to be thinking about just yet, it's just because some of you may be going through this and you're going, how useful is this tool? Is it really worth it? It maybe doesn't pull back that often. But as we start to bring in those other things, especially when we look at multi-time frame analysis as well, which we'll get into in a bit, right? And then we have to look at the premium discounts of multiple time frames. That is when it becomes very, very powerful, and you'll see then how useful but simple this tool really is. So anyway, let's just kind of quickly go through the rest of these, and we'll just kind of finish it off. So in this case, we do come back to the EQ, we come down into discount prices, and then buyers step in to fuel that next move to the upside. This time, just about miss it, or do we come to it? Yeah, pretty much the EQ, right? Again, not going to be picture perfect, but I would pretty much count that as coming back down to the discount prices there for me personally. And then in this case, of course, we do come back down to the discount prices, but it ends up being a full-on reversal. So now we are bearish, we mark from the high down to the low, okay, and then we look for price to come back up. Yeah, that's reasonably close. It's not ideal. We were looking for that short. We would want to try and see if price can come up. But remember what I said. You want to be looking at how often, when we get that first initial trend change, right? Collect the stats on this, do the hard work. How often on the pair that you are interested in, so in this case euro dollar, right? How often on that first initial trend change does price pull back to the premium if we're short, right, or to the discount if we're long? And you'll see sometimes we do and sometimes we don't. Then we're in this next swing range here. Of course, we do pull back up to the premium, but it ends up being another reversal as that bearish 4-hour trend is short-lived. So now we can mark the high to the swing low to the swing high, right? Now we have our 4-hour break of structure. What do we expect? We expect a 4-hour pullback. How can we anticipate that swing run is over and the 4-hour pullback is kicking in? Well, we can look at internal breaks of structure. So we don't get a minor break of structure really until potentially all the way down here, but even then we barely take it. We just about wick it, because all of these candles here, right, they all break the prior candle's high, so that's all part of the up move. So there's nothing in this leg, on the 4-hour leg, for price to break in terms of minor breaks of structure. All we really get, remember we spoke about this before, is this substructure low, right? Because we come down and then we take out that low there. So substructure low is the most aggressive, but we get one there and then we get another one here. Potentially when you see just the first one or potentially the second substructure break, that may be enough for you to want to look to take shorts. So where can we target? Well, let's say we got in short here. First minimum target can be that weak low, right? Because you expect it to get run. Next target can be down towards the EQ of the range, or further down into the discount. Then when we are into the discount, right, we know that this is a good time to start looking for that potential higher low, right? We know we're in good areas of value for buyers to step in. What can we look for to give us an indication that that higher low may have now formed, to give us more confirmation? We look for a change of character to the upside, right? We look for that break of structure. So we have a minor pullback. We then take that minor low. Because we take a low, right, this low here, what does that mean? It means we must have a minor high. That is where our minor high is. So then we take the high, we pull back in, and then we go, right? So it's the same thing again and again, using those changes of character, those internal breaks of structure, to signify when the swing run is over and when the pullback's starting, and then when the pullback may be over and the next swing run is starting. But now we're overlaying premium and discount to give us that little extra edge to show us we are in good areas of value. Okay, so you can start to see now how these pieces of the puzzle are slowly coming together. So in this case, we don't come down to the EQ, right, and we continue to go up. And then here, right, we do, if I can get it to draw on, we do come down to below the EQ. We are in discount prices. We could be looking for longs from here, but it ends up turning into a bearish reversal. So we mark out the low to the high, and in this case, right, we get that trend change. Now this is a case where it is the first initial trend change, but we do pull back up into the premium. So remember the first one we looked at here, where we got that first initial bullish trend change, right? Price didn't come back down. Then we got that first initial bearish trend change here. Price didn't technically make it, right? It came up to a decent area of value, but not quite into the EQ and the premium, right? Which is ideally what we'd want to see. Then we do get that first initial trend change again here, but we do come back this time, right? But if you're looking at kind of the long-term trend, it's quite later on in that initial trend. So, that's probably why actually it does pull back, right? Because we are starting to run out of steam, and that's why we only get another couple breaks of structure, and then we get that initial trend change, right? So now the longer-term trend is starting to end. But in this case, we do actually pull back up to the premium. We get that nice, premium prices to be looking to sell for. How do we know now that the lower high may be forming? We get a change of character to the downside, right? And we push down. And now this is when you can even use the premium versus discount on those internal legs, right? Because what happens? Price pushes down. Now you have a bit more confidence that lower high is going to form. Why? Because we're in the premium prices of the swing leg. We've had a change of character to the downside with that minor break of structure here. So we've moved down. We don't just want to jump in sell straight away. So what can we do? We can mark out the internal leg, right? We wait for price to pull back up to form that lower high. Comes back into the premium prices of the internal leg. We're also in the premium prices, right, of the swing leg. That's now a high probability to look at a minimum target of this swing low here, with the potential you can be in the long-term bearish trend change, right? So you can really see, hopefully now, how this is all starting to piece together. New swing range here. Again, come up into the premium. What do we get? Lower high forming in the premium, change the character to the downside. We can then mark the internal leg. What do? We pull back up into the premium of the internal leg. We look to get short, target that weak low, right, as a minimum. Again and again and again. Just adding these sort of layers of analysis to help us, right? This time we don't quite make it near the EQ, but not quite, so technically not a valid pullback in terms of just, trying to count the stats here, right, of whether it does pull back to pass the EQ or not, okay? So although I said it's not valid in terms of that, of course you can still look to take these trades. And this is what I mean, right? You're just going to have to work out, are you going to be happy to sell in those low prices, right? Are you going to be happy to sell on the discount? There are going to be plenty of times where you still get massive risk to reward, okay? So this is what you're going to have to figure out yourself and collect those stats and see what makes most sense to you. So again, we have massive momentum here. And this where you have to kind of ask yourself, theoretically, what is the likelihood with that amount of momentum that we are going to get a steep enough pullback, right, where buyers are going to want to wait for those premium prices? Or because there's so much momentum, actually, you know what? Sellers just want to step in, right? They don't care for price to come all the way back up here. The trend is so strong, they want to get in short. Price only has to pull back a little bit, right? Buyers cannot generate enough demand, right, to push price up higher, and then we get those trades short, right? So when you see a lot of momentum, right, and then we get that change of character to the downside, maybe that's enough for you to then look to want to get short, and you're happy to sell within the discount prices of this 4-hour leg, right? Then we are within this swing low to this swing high. What do? Pull back up into the premium, and then that is enough for sellers to step in again. And then we start to kind of fall a little bit more correctively now, right? Pull back up into the premium prices, and then we fall down again, right? Almost there. Draw from the low to the high, up into the premium prices, and then we sell off. And then of course, in this case, we do come up to the premium prices. Don't actually draw it on, so it's to the swing low there. And we pull back up into the premium prices. Don't know why I haven't got my little circle on. There we go. So we do try to sell off when we get to the premium, right, and we try to go down. But remember, we spoke about this. This is when buyers keep stepping in. You can see those big wicks, right? They're just stopping the sellers from driving price any lower. We then start to get those internal breaks to the upside, right? Multiple in a row. You can see those higher lows starting to hold, showing you that the buyers are starting to potentially take control. And then we do get that initial 4-hour trend change. So at that point, we are bullish. We draw from the low to the high, right? and we can then look to potentially short back down into those discount prices, right? Because we get that first initial change of character, that first minor break of structure, we get another one, showing you, that bearish order flow starting to kick in, and we can look to target the EQ, but in this case, price ends up going lower, and we do get a full-on reversal. So now we are bearish again, and we draw from the high to the low, right? What can we do? What do we expect after a 4-hour break of structure? We expect a 4-hour pullback. How do we know that 4-hour pullback is about to kick in? We can look for a change of character. So where do we get that? We get the minor low, the minor pullback. We take the minor low. Because we took a low, that means there must be a high. That is our high there. Price then takes that. It gives us our minor break of structure, right? Because we break the high, the minor high within that swing leg. So that gives us our change of character. So then what can we look to do? We can then mark the internal leg, right? We can wait for price to then pull back into the discount of this internal leg, right? This internal structure. Then we can look to buy that internal high low to do what? To target the 4-hour pullback back up into premium prices, right? So you can see it just misses it by a few pips. But again, this is where you're gonna have to decide whether or not that's still okay for you. That's, high enough probability to still look for shorts to then take this to the downside. Yeah, and then we don't get a minor break of structure, another kind of change of character really until down around here, right? But you can look at the substructure breaks and so on and so forth. And of course, we'll be using multi-time frame analysis as we go on, and then we get another break of structure. So now at this point, we can mark out the low to the high to the low, right? And then we can expect potentially price to pull back up to those premium prices again. Okay, so yeah, hopefully that's, it's a reasonably simple tool, but it can be very, very powerful, especially when we start to build on this more with more concepts. And we can really kind of piece the puzzles together. So obviously go back through the swing structure that hopefully you should have marked on your charts. Draw all of these on, and what I would also recommend, if you haven't done so already with your swing structure, is go further back, collect as much data as possible. I believe on this forex.com data feed, the 4-hour chart goes all the way back to 2013, right? So you can get over 10 years of data there, not over, just under 10 years of data on the 4-hour chart. It probably won't actually take you as long as you think, but literally, if euro-dollar is going to be the pair that you want to concentrate on, or whatever pair it is, it's only going to take a few hours. Put some music on, enjoy it, see it as an investment, as for your future self, right? Take this shit seriously, right? This is a professional business. Collect the data, do the work, and then when you have that data, you've proved it to your mind, right? You've gone in there, you've done the hard work, and you have the hard, cold data to back it up of how often price will pull back to the discount prices in a bullish trend, and how often price will pull back up to the premium prices in a bearish trend. And that, okay, on euro-dollar, on the 4-hour chart, it does that X percentage amount of times, then you have so much confidence in the market. Because if you're seeing this move here, right, and you're looking to get long, you can know maybe at the start of trends how often it does pull back and how often it doesn't. And rather than you waiting, you'll have then conviction. Maybe you want to see a few more other things to build that portfolio of evidence. Then you're happy to get in long here because over X amount of years of data, whether that be 2, 3, 4, 5, 10 years, however much you do, you will know with X percentage probability, how likely that move is going to continue, right? So that is going to do wonders for your psychology, right? Because if your goal is to be a professional trader and you want to trade 6, 7, 8, 9, 10, whatever figures, right? The higher you go with that account capital, the more psychological issues you are potentially going to run into. But if you have cold, hard, mechanical data to back that up, right, you're going to give yourself that highest probability of having success and not sabotaging yourself and having those ifs and doubts, because you've done the hard work now, you've collected that color data, and you can look at your spreadsheet, you can look at your trade plan, wherever you're going to record it, and you have that percentage figure staring back at you, and you can use that with confidence, and that helps you to take that long-term vision, focus on the law of large numbers, right? Everything that we've looked at in trading an edge, and then you can be the casino, right? Rather than the gambler, you have that edge in your favor, and you can trade with confidence. So what I would do, right, however you want to do it, whether you want to do it in Notion, on a spreadsheet, or literally just on a piece of paper, right, be a bit old school, is do this, and then you can either do it at the end, like I'm going to show you now, or do it as you go along and, take a tick. Maybe you want to use this icon here, right, and as each time you draw it on, and you can even, change that to green, be nice and fancy, right, maybe make it a little bit bigger, whatever. Save it down as a template, and you can go, well, in that case it didn't come back, that case it didn't, this case it did, so maybe you want to put like a little tick there beside each swing low, and then maybe you want to put like a across. Let's make it nice and red, keep it pretty, right? And then you may want to put that in all the places where it didn't, right? So that swing low didn't pull back. To be fair, that one did. So I would just put, you know, the tick beside the swing low, just so you know exactly what it's referring to. So that one should go there, right? So that one doesn't pull back to the EQ into the discount. So in terms of, you know, what we're trying to record stats on, then you can quickly go back and see, you can count them all up, right? So you have one column with all the ticks or one column with all the X's, whatever, and then you will eventually come to a total percentage, okay? So I would just do it very simply for the 4-hour swing structure, have a total number where you've collected and you know what percentage in general, and then you can get a bit more advanced and you may want to have a separate column where you're purely just looking at the first initial trend change, right? And then you'll collect the stats on that. So then you'll have a really good idea about that, okay? Yeah, and so on and so forth. And then if you want to be really advanced, right, then you can start looking at minor breaks of structure and things like that. But I think that's a little bit overkill for now. Just concentrate on your swing structure. Do it just on one time frame, right? I'd recommend the 4-hour time frame. And then again, as we go through the course, we start to apply multi-time frame analysis to this. We start to apply supply and demand, and we start to apply liquidity concepts. You will then have such a great understanding of, you know, when you can see and anticipate ahead of time that price isn't likely to pull back. But you would have already done the hard work and you will already have the stats. Yeah, I just can't recommend enough that you do this. But I'll stop ranting now. I'll let you get on with it. Yeah, and let me know how you get on. You know, chuck your charts into the community if you want any feedback as well. But yeah, I'll be really interested to see what stats you get, because of course there's not going to be, you know, everyone's going to have slightly different stats here because everyone will view structure slightly differently. Like I was saying over here, right, some people may not view that as a swing pullback. Some people may view that just as a minor break of structure. You know, some people may be even more aggressive. So there will always be slight differences. But yeah, keen to see what you guys come up with, yeah, and see what stats you get. So yeah, put some nice music on and enjoy it.